Hey, Steve and Jamie, how was it today?
Hey, what's up there, Scott? Thank you. Steve, my friend.
Yes.
Boy, how was it today?
Um, I want to say painful, but it wasn't really painful when you're in mostly cash. So I guess I'm speaking more about my recovering knee surgery being painful.
Absolutely. Welcome, everybody. Today is office hours. You get myself and Steve Gomez. It's the 16th of March. Man, March is already halfway in the books. Seems like it just started just the other day. But welcome, everyone. Before we get rolling here, just want to get the disclaimer out of the way here. Of course, we're all big we're all big boys and girls. Somebody to tell you what to do, what to buy, what to sell, when to do it, and all that good stuff. Please seek out a registered investment advisor or another licensed individual, maybe somebody like a Series 7 stockbroker. In other words, somebody that holds that license that can legally dispense, buy, and sell information to you. Once again, everything we share with you is for educational purposes only. All righty, moving right along here. Always a fair amount of new people in the webinar, so just like to take a little bit of time at the top of the hour to let you know, not only do we have one-of-a-kind award-winning technology, but we've built quite the community around that technology. So over here in the upper left-hand corner, Barry's Trading Room, or I should say the TI Trading Room, hosted by Mr. Barry Anderson, opens up 30 minutes before every open. Boy, from what I hear, record crowds as of late, as everybody's kind of staying home for you know what. But 300, 400, 500 people in there on a daily basis. The good part about it, other than Barry, of course, is the price. It's free of charge. You don't even necessarily have to be a TI subscriber to get in there and see what the community is all about. So if you haven't been utilizing that resource, by all means, get in there and take advantage. It's a great place to learn. There's people from all walks of the trading sphere in there, beginners, intermediate, all the way up to advanced. Of course, Mondays, you get myself and Steve for the 5 o'clock slot. Steve's going to take the steering wheel for the trade of the week on Tuesdays, and Andy Linloff rides shotgun with him. Wednesday, hump day rolls around. You get the CEO and founder, Dan Merkin, along with our chief technical officer, Brad Williams. And then Andy takes the reins back on Thursday for the trading studio, and I ride shotgun with him. And of course, our ever popular daily support session, which is now running each and every Monday through Friday, starting off at 12 p.m. Eastern, and is hosted on YouTube. So you'll see here on the next slide, it's a good idea to bookmark this address down here. I don't know why that little thing came up there. Yeah, trade-ideas.com/live. That's where the daily live support sessions are always going to be moving forward via YouTube. So join us there for anything TI related. And when I say anything, could be a simple configuration question, could be questions about the AI, backtesting, anything is fair game. So every day starting at 12 p.m. Eastern, Monday through Friday. Of course, always like to give a little peek, show you guys how our user base has been rapidly expanding since the introduction of our AI module. The very first one came online January 2016, and each and every year since then, we've seen a nice little bump in our user basically base. Of course, it's not all AI driven. We've got a lot of cool things going on in TI Pro, but this is just showing you how our user base has expanded since 2016, and we expect more of the same in the new year. In addition to news, not too long ago, we released our broker tool, which allows our Brokerage Plus interface with interactive brokers. Kind of a short history lesson there. We decided to go with interactive brokers a while back. This was before the race to zero commissions even was a thing, but of course the market, as always, is changing. Landscape's constantly changing, whether it's commission rules or anything of that nature, regulatory issues, whatever. But the bottom line is this: we don't yet have a $0 broker dealer that you can trade with Brokerage Plus yet, but we're working on it. In any case, in the current manifestation at Interactive Brokers, people are really taking it. You can see live orders in blue, orange orders are in demo mode, but month over continue to get bigger. That tells us that people like it, they're using it, they're continuing to use it. We're taking on more users, onboarding new users that are, taking advantage of all the advanced functionality that we have as well. So if you haven't got in there and tried it out and you've got an Interactive Brokers account, I'd highly recommend it. All right, and here we are on today's agenda. And in keeping with tradition here, I'm going to kick the reins over to Steve, and we're going to take a look at the large tracking ETFs and the overall market action. Because with this uncertainty brings lots of volatility, which is good for us traders. So the volatility is definitely on right now, and Steve's
Back on the mute there. Hang on a second.
No worries.
All right. So, Chase, I mean, I don't know. What do you say? I mean, other than just trying to scene here. Okay, yeah, there's our 10. Hasn't even given an attempt to try and recover. Every even healthy-looking green candle bounce is met the next day with horrible overnight news. This day after this day. Yesterday was or Friday was looking like a pretty darn good close, and then boy, you put together all the news that it shucked off, meaning the interest rate cuts and 700 billion, and we can really do is go back and look in hindsight, and for that I'm going to actually go to a weekly chart here, and we can see that well, back in December 2018 we had a low back here of we'll call it 233. I mean, that very well could be on the table in terms of a pivot level, because the moving averages are certainly bleeding through, and that's not stopping anything. So I think we're so close. Why not? 243 probably is coming. I could even just mark that up pretty basically right there. So that's something that I see right off the bat. Beyond that, who really knows? Some sort of news, good news they can get their hands around. I mean, in my opinion, something along the lines of, yeah, the government says we know everybody's in complete uncertainty mode now for the next 30 days, and everybody has their own unique circumstances in which they're trying to solve stimulus and divide that by all the taxpayers out there and families, and before you know it, all the families could have a few $1,000 check coming their way, and that would be an amazing bit of news to try and take the fear away from a lot of the individual scenarios that are going on out there, because it really can't be solved at the federal top level. It needs to be solved at the household level. Pump these pockets full of cash however we can do it until this crazy storm subsides. But I'm not here to talk about that kind of stuff, fiscal policy. I'm here to talk about what the footprints in the sand mean, and just a quick example of how you can erase months, or if even in this case over a year, in just a couple of weeks. The market takes the elevator up with greed, and the fear the stair steps up with greed, but the elevator down with fear is 10 times as strong, and we can certainly see that. So, I don't know where we go from here. Again, this will be to be determined. Let's do this, though. Let's just look at our weekly respective levels. Okay, so the level that we saw back there in the S&P looks like we've kind of already hit in the NASDAQ. Was that the same one? Or was it this one way back here? I think it was that one way back here. So the NASDAQ has been holding way up. That's that respective level that we just drew. Here we go, in the S&P. So the S&P is close to tagging this line base off of that low. NASDAQ's hanging in there, but still in no man's land. It took out that level right there as well. You almost kind of throw all technical analysis out the window at this point, because there's just so much reaction and overreaction back and forth. But it is nice to know where our technical levels are. Just for fun, let's look at the IWM, because that one's probably the worst. And there's our respective low in the IWM that we were keying off of, and this thing is already taking that way out and then some. So small caps are not sticking around for much. If we go back to the treasuries, they popped back up again today as the market kind of got weak on the close, and gold has just been an absolute bizarro land, quite honestly. This could be a lot of liquidations, or this is a really crazy move off of something that was kind of moving nicely. It's not even a stock, it's a kind of a safe haven commodity. But I guess what I'm trying to say is there's craziness across the board out there right now. Heard some water cooler talk about a potential freeze, says Christopher. I'm not sure what the freeze would be. Let me say this, though. A lot of people are saying close the markets, close the markets. There's laws against that. We can't be closed for more than 3 days. I don't know if we want to close the markets. I think that might be worse than keeping them open. We should always probably have price discovery in real time and know what's going on. I think that'd be a pretty draconian measure to close our markets if it did come to that. Commodities getting crushed, yeah. Potential freeze on commodities. Yeah, Christopher is with me. I'd love to keep them open. And yeah, if you're a day trader and you are adept and nimble, this is your kind of market, really. I mean, look at last Friday, just coming home on last Friday. If you were paying attention and watching what was going on, the market was keying off the coronavirus, last Friday, and you're a day trader, you started to feel the whiff of good news coming. Well, that was a pretty nice move on Friday. But if you're a swing trader, you woke up to this garbage. And so, right now, when it's this volatile, yeah, the day traders kind of have the upper hand because there's no overnight risk. That's for sure. All right, well, I've made a mess out of my charts here, just like the charts themselves, Jamie, are a mess in general, but I think we get the general picture here. I will say this, the markets were due a correction. I just don't know if they would do something like this so quickly and so nasty, but this is healthy, and I do think in the long run, when this does get by us, and it will, I think there's going to be a lot of pretty good rebound and good opportunities that could be out there. And so I think Jamie's going to talk about maybe what some of those good opportunities could be based on a few different metrics. And so with that, that's all I really got.
Good stuff, Steve. Good stuff. Thank you very much. Let me grab it back here. All right, you should have eyes back on my screen.
Yep.
What was interesting today, as a couple other sessions last week when we did gap down, it seems to be, getting about halfway up through the gap, which is exactly where we topped out today, where you can see the orange line up here at the highs. That was about maybe a few pennies past the halfway mark on that gap before we did roll back over here. So one of my favorite things that I like to keep up with each and every session, some of you have heard this multiple times, maybe it might be new to some of you guys, but I got one of my favorite compare count windows that I like to look at 15 minutes in. Of course, since we had the trading pause today with the circuit breaker clicking on, kind of skewed the numbers, so I didn't really post it like I normally do. I said, well, I'm going to watch it for the remainder of the day. And this is what it looked like having run all day, okay? So even though we did have this nice little up move to start the party today, the count overall was very red for most of the day, and then of course we rolled back over, didn't quite get back down to the lows, but pretty close. Okay, so all in all, even though we had a kind of a messed up opening with the halt, the compare counts still holding their worth as far as my opinion goes on that topic, as far as telling us what might be coming down the pipe for the remainder of the day. Tomorrow, of course, these overnight gaps based on what macro news may surface overnight kind of makes it a coin flip, so, just along the lines of what Steve just said there, if you're a scalper, not taking that overnight risk, great. That's the whole, I guess, shtick about swing trading in a quote unquote regular market before we started having all this corrective type activity, is that the algos are very hard to trade against on an intraday basis, and you don't get the volatility that we're seeing now. I mean, as far as I'm concerned, this is a scalper's paradise because you're getting the big moves in relatively short amounts of time. And of course, as traders, we always have to be adapting to the current market conditions. So nothing wrong with scalping right now in this market environment. But if you're swing trading, you might want to think about backing out the size and kind of doubling up on your stop loss areas and all that good stuff to account for the volatility. All right, so having said that, who knows what tomorrow shall bring? Steve was showing you the weekly charts. I just keep going back to this monthly on the SPY because you don't have to be a technical expert to kind of see what's going on here. We got just a little bit of room down here until we hit the 232 level. If that guy doesn't hold, then back here in this area right here, 2015 area. All right, so I have quite a bit of information to talk about when it comes to the AI, but in market conditions such as this, it's a little bit different of a story here. So let me get my charts back on daily here. And we can see the AI, if we focus on the tool or the channel bar over here, we only had 4 signals. 2 from, so on a day like today, only spitting out 4 trades. Trades did extremely well, which was this BXMT here. So usually what I like to do, other than just showcasing the trades and the entry signals, is talk about the spread that sometimes develops between conservative profit, which we can see right here, and moderate profit, which we can see right here. Screwed up my column there. We can see the exit price again. So conservative profit is the AI just obeying its rule set, like you or me would trade. You know, if we're wrong, we have to have a stop loss, a profit target sometimes. There's always a timed hold attached. And then the AI can exercise a profit save or a reduce risk to exit the trade early. Now, BXMT, number 1, power hour short spawned the trade. And I was talking to Steve about this before the webinar began. I'm like, man, it's been ages since we've even seen power hour short making appearances in the AI strategy again. And that's mainly due to market conditions, but obviously with the action that we've had as of late, it's starting to show back up again. And boy, what a trade it was. We can see this was a late day trade, you know, coming back over here. The trade did not execute until the power hour, which is the last, well, it's actually the 30 minutes, well, let's just say between 3 and 3:30 Eastern time. You're seeing 2 o'clock on mine because I'm in Central Standard Time. But what a nice entry we had right here at 24.65. Now, a lot of the times, we'll see the AI make a trade, and then we'll see this pattern play out. For example, let's say maybe the AI had called it back here, and then it just took a little while to get going. But not the case here. I mean, this is a beautiful setup on many different levels, in my opinion. Number 1, because just as the power hour short was triggering BXMT right here, notice what we had going on. These are 15-minute candles. All the activity, just a beautiful, very tight consolidation leading up to that entry signal. So we had probability on our side to begin with from the AI. What was the probability like? You might be asking yourself, well, power hour short, you can see came into the session down here with 66.7% chance of working anything that guy spit out today. So number 1, we had probability on our side. And this thing just worked beautifully from the entry signal here, just marched down for the following 45 minutes, blew right through the profit target, which is what we're seeing reflected in conservative profit mode here. Target got hit, trade was closed, everybody's happy. However, if you ignored that profit target hit and you said, you know what, this thing's marching down nicely, I think it could continue, and you ignored the AI's signal, well, you didn't quite make double, but 259 as opposed to 426. And by the way, these numbers are all based risking $100 per trade. So if we ignored the exit signal right here, decide to hold on, we got paid a little bit more. So a nice spread there of 259 to 426. And of course, you know, we're never going to top ticket. Can't say never. Every once in a while you do, but it's the exception and not the norm. But plenty of spread in there to have been taken advantage of. Otherwise, other than that one, not a whole lot to speak of on the AI. It was making pretty good exits today. The OPGN, very interesting here because we had a double signal in this one. First, we had actually the short was the first one that came out in OPGN. Conservative profit, got that one pretty good. As you can see right here, let me erase those lines right here. I'm still trying to get used to my drawing mechanism. First signal right here, and then the AI closed it out right here. Tried to go long later on in the day, up in this level right here, and looks like it pretty much just scratched it right there with a profit save of a flat there. So made a good exit right here on the first one on the short, tried to go long and scratched it. But all in all, on a day like today, seeing the AI post a pretty impressive profit up here from 1.0 and a little bit from 2.0 and NEO being a flat, not a bad day, not conservative profit. And that really kind of just depends on the day. I'm more prone to see when the AI is making an exit and see if I agree with it. I always like to say that the AI's strong suit is the statistical probability that it brings to us through the massive calculations that it does each and every night. Bottom line is we could never hope to make those calculations, and even the AI, it usually only finishes all of its back tests and optimizations a couple of hours before the open. Okay, so it's running all night and then pretty much up until the wire to get those data sets ready for us. So that really is the strong suit of the AI, or the statistically weighted entries. Can't say it's dumb on exits, but a lot of the times, based on the way that we humans read charts, which is not the way the AI is doing things, a lot of the times we can decide to stay in something and get that spread between conservative and moderate profit if we like what's going on with the chart and feel that the momentum is there, or that the risk level of staying in that trade is warranted. So that's a good question there about the difference between conservative and moderate, and which one do you prefer. So keep in mind what moderate is doing. If the stop out gets triggered on moderate, then the P&L stops updating. But basically it honors the stop loss levels, but it doesn't adhere to the profit save and reduce risk parameters, giving us the option to stay in and see what happens. And then lastly, aggressive profit. We see these figures out here. This is just showing you what happens if you just put the trade on and let it go for the remainder of the day with no profit target, stop loss, no type of risk management whatsoever. Just showing you what happens to the position with no stop. And it's very eye-opening on certain days, because whether you've been in the chair for a while or for years, you've probably heard this said before, and it's usually by very successful traders. They're like, yeah, every day I show up and do my thing and I make a little bit or lose a little bit, and it typically boils down to anywhere between 3 and 5 trading days where I do take a lot of risk and really push things, okay? And by watching aggressive P&Ls, you'll start to notice, okay, these were the 2, 3, 4, 5 days where things really could be pressed either to the long or the short side, and you'll start to notice correlations. And over time, over dozens, if not hundreds of sessions, we're learning by default and going, okay, these conditions last time produced a very handsome aggressive profit. And over time, just like watching the AI day in and day out, it's like watching a very good statistical trader each and every day that never breaks the rules, okay? Steve and myself would have probably given our left arms to have a mechanism like this back in our rookie trading days, but that was then, this is now. So the AI is a very good teacher as well. So just keep that in mind as you move forward. And unfortunately right now, the AI does not engage in options trading. We have a few select options filters available in the product, but right now the AI only focuses on the US equity markets. All right, moving right along here. Let's see, one day I will get used to my drawing tool, but bear with me right now. There we go. Okay, one more time, and we can do this. Okay. So the AI held its own for 4 signals, some decent spread, power hour short on the BXMT. Now, back to some bread and butter type stuff. Okay. As you all know, and as was illustrated in this beautiful trade on the BXMT and the range break coinciding with the AI signal, beautiful. But this pattern right here just happens to be one of my faves based on several factors. First and foremost, it's the simplicity of the trade. And they're here each and every day, right now. There's a lot more of them. Of course, there were a lot more of them to the downside today, happening at all different times of the day. And we're going to get to a few of those trades and the windows that I use to generate them. But before we get to those things, I did create a new top list that I just distributed before the webinar started into the chat panel. So if you draw your attention to the chat panel, you will see a cloud link for a screen called Dividend Radar. So you can take that cloud link, load it up. There is only one custom formula that you have to deal with, and it's for this metric right here, dividend yield. This is a custom formula. I've also posted the custom formula into the chat area as well. You should see it right below the cloud link for the Dividend Radar. So what is this guy doing for us here? What is the Dividend Radar? Well, as you can see here, oops, there I go again. Hold on one second, pointer. Okay, so Dividend Radar is showing us stocks with very bare bones filtering. You can see here, stocks between 5 and 150. Of course, you can always modify these to your liking. You want to take it up, you want to take it down, fine. Using our dividend filter, I'm saying these companies have to have had some type of dividend, okay? Here I just put a dime, but that's not really what I'm focusing on here. Average daily volume, 500,000, just to try to keep the extremely thin things out. But on this custom formula that I've created and dropped in the chat for you guys, dividend yield, only want to see stocks yielding at least a 2.5% dividend, okay? So you can see here, this is a pretty packed top list. I think it's maxed out right at the 100 level, but you can go in there and lower the dividend, value, increase it, whatever. But it's producing some very good metrics in the form of dividend yield. And then I've also included quarterly revenue growth. We can also see the dollar value of the dividend. So for example, I never really knew Trip added 20% dividend yield, okay? That's pretty impressive, pretty massive, a $3.50 dividend on a stock that is currently trading at $16.81. Has been coming down for quite some time, but we're seeing some things out there that are getting pretty attractive as far as dividend yield goes. Now, having said that, does that mean I would blindly start just buying things that have high dividend yields? Well, not necessarily, but it would definitely be something to keep an eye on as the market continues, because who knows, we might be bouncing tomorrow and never see this level on the SPY that we were looking at earlier on the monthly time frame, but then again, we might. So when it comes to looking for stocks that quote unquote have good value, we can focus on all the fundamental filters, okay? It just seems that dividend yield might be a pretty good place to start when it comes to trying to pick some things to hold on the longer term that may hold up over time in the form of dividend and or price. Now, one thing I forgot to add to this list, and I don't even know, yeah, I was seeing if we had a book value, but I don't think, or cash. Cash might also be another good metric to focus on here. So I'm going to go ahead and throw a cash column on here just to take a little peek here. Okay, so you might want to add it. This is a default filter, no need for custom, but you might want to also throw cash on there when you're starting to, search for these high yielding dividends there, because, seems like a good combination. A lot of cash on hand, high dividend yield, no guarantee, but as far as price action goes, if we did keep getting a little bit more of a beat down, things with lots of cash on the books and high dividend yields seem to be pretty attractive in my book. So as the next week or the rest of this week unfolds, if you see some of these plays and you want to start, getting in there and getting a little piece, do very small share sizes, whatever your current entry is, maybe just think about doing a fifth of it, fourth of it, an eighth of it, okay? Because you can't go wrong there, because we always hear about dollar cost averaging, but usually that's in a quote unquote regular market, and people are basically doing it for the wrong reasons. Trade's moving against me, average down. Oh, well, I'll average down again. But in circumstances like these, we have to reevaluate, because when's the market going to bounce? Nobody knows. But we all have a feeling that it's getting pretty close, or at least to stabilizing. You know, we never know how fierce the bounce is going to be, how long it's going to last. But everybody can kind of smell it right now. I mean, don't you think, Steve?
Oh yeah. Quickly, just to reverse a little bit, a couple people were wondering if there was a link that might not have made it in the chat window. Then Bill may have joined the party late and didn't have access to it, but just making sure that what was supposed to be in that chat was in there. Maybe you might need to redrop something for Bill. I'm not
Well,
sure. Sorry.
I'm looking at the chat panel right now, and I'm going to
Everything's supposed to be in
recopy.
there that you. Okay.
Yes, everything is in there, because let's see, Control C.
If you come late, maybe it wasn't available to him. Planning in late.
Right, so there is the link that I just reposted in there. Of course, it's not giving me the blue. It's got parentheses around it for some reason. I tell you what, let me just redo this real quick. I'll load up the fresh link. I'll just get this one, just so we don't have any funny parentheses on the exit or the sides there. Okay, I redropped that, and I'll redrop the custom formula as well, just so everybody has it. Okay, so now both of those things have been reinserted into the chat panel. Hopefully, hopefully you can get it there, Bill. If you're having issues, let me know. And by the way, on this custom formula, if you're familiar with how to load up custom formulas, there it is. Shouldn't be a problem. But if you're not too good at that and you need some help getting that custom formula into your account, when the webinar is done, you can always email info@trade-ideas.com. Just reference the dividend yield radar and you'd like the custom formula. They'll pump that email over to me, and I can just get into the back office and put it into your account for you if you're not the most proficient working with the custom formula editor. No big deal. All right, RJ's saying it's not showing up either, so I don't know. I mean, there's only one chat panel. It's not the questions panel, keep in mind, it's the chat panel. So you might have to go to your go-to webinar panel there and pop out the chat panel in order to see it there, RJ. All right, Bill says he has it now, so it's definitely there. So anyway.
Otherwise you can otherwise you can always email info if we don't work it out for you.
Right, absolutely. So resorting this top list again by dividend yield, I mean, you know, I've never been a big dividend guy, but it's certainly eye-opening, especially in these market conditions. You know, 20%, 8, 7, you know, all these guys down here at 3. You know, well, all the charts are pretty much going to look the same. I thought about maybe adding consecutive down days to this thing as well, but like I said, they're all pretty much going to look the same. In addition to that, I think quarterly revenue growth is actually eye-opening too when you're scouting out the high dividend stocks, because I mean, assuming this is correct down here, Royce Value Trust, you know, taking some big beatings over just the past 2 days, and you know, look at that. Look at that quarterly revenue growth of 386%, 65% for GGAL, MNRL 91%. So when you start coupling a lot of these metrics together, good cash on the books, high dividend yield, big quarterly growth, of course, big quarterly growth. You know, we haven't really absorbed all of this Corona stuff into the next, you know, into the next earnings season. So those numbers might change a lot, but for now, definitely interesting. And of course, you might think of other metrics to add to this top list to enhance the value, depending on what it is you think is important. All right, so that's what's going on with the dividend yield. And of course, keep in mind as well, with minimal filtering in here, gives us the ability to, to add more minimums and maximums and still have a pretty good data set to look at here, since this thing is already maxing out at 100 or so. Raising the dividend yield, lowering it, going in there and putting, a certain amount of cash on the books. We can start mandating minimums here as well. So lots of different ways to massage the data here. I just figured I'd kind of leave it open and let everybody kind of put their own personal spin on it. But definitely something to keep an eye on as the markets continue to develop, for lack of a better term. All right, now let's go ahead and take a look at some of the, the bread and butter setups that were out here in the form of the range breaks. I was just helping a user over the weekend that was talking about, I want to find stocks that have been consolidating over a 10-day period. I'm like, well, nothing wrong with that theory, but it's going to be kind of hard to find stocks that have been consolidating over a 10-day period. Not to say that those aren't out there. I haven't seen any, but I'm sure there's maybe one or two that are immune to market conditions. But finding a stock that's been consolidating over a 10-day period, it's going to be a pretty tall order because of what's been going on in the marketplace. So when it comes to consolidations, we have to, size it up on the larger time frame and go, yeah, this could be a bottom. Now, is it going to set up nicely on the intraday to where I can make a decent entry and take a shot on this thing bouncing, assuming the intraday risk is in line? And typically, you have to search high and low for these things. Maybe it's on a normal trading day before we had all this carnage and mayhem. Maybe you have to cycle through 5 or let me start a little bit higher, 15, 20, 25 symbols that are all hitting highs or lows respectively, depending on which way you want to play the break. Today, they were in abundance to the downside. And instead of having to filter through 15 or 20 symbols, you're probably going to find one after looking at 10 symbols from what I could tell today. So not having to look quite as thoroughly because the gist of it is, once again, reflecting back to this one trade from Holly today, BXMT, we had this nice little consolidation all the way up until an hour before the close, before it pierced this level right here where you can see the orange line. Now, what does it have to do? It can't break out of that level until it hits a new daily low, all right? So not only did Holly peg this one at what I say is the perfect time, but also it was coming through my turbo brakes down as well. Now, if we look at the daily over here, this thing's really just fallen out of bed. Not quite down to a all-time low because we can go all the way back to 2016. Still got some downside action, not in the abyss per se. But this one came out of this version of turbo breaks down. Okay, this one has nothing to do with all-time lows. It's just, stocks hitting lows with accelerated 1-minute volume. So at the exact same time that Holly called it, it came through right here at that 2 o'clock hour. So when we see something like this, let's say Holly had not been in it, it's beautiful. It's breaking the plane. On these for risk on a manual basis, I typically look 1 15-minute candle back, and I'll expand this out just so it's a little easier to see here. So assuming this is the entry candle right here, we look at the prior 15-minute candle. Can we stomach a stop loss at the high of that candle? Sure, why not? Look nice and tight, low risk area right there. So Holly even had the stop a little bit tighter, 25.04, which if I made this one manually, I probably would have been at 25.11, but pretty close, all right? And the beautiful part about it is never even acted like it was gonna stop us out. So as far as extremely low risk versus reward, if this is my risk area right here, and then I put a line down here where this thing topped out or bottomed out, I mean, look at the difference between risk and the reward area right here. I mean, you could probably fit that thing in there 5 or 6 times, okay? And that's what we look for. We look for low risk, high reward. Everybody's a little bit different. Maybe your minimum is 2 to 1 or 1.5 R, 3 R. But just a beautiful trade nonetheless on that one. Now, a lot of these, this window here, over here, are just two different variations of turbo breaks up and turbo breaks down respectively. This little guy was pretty quiet today. These are the stocks hitting all-time highs, and you can see BMTX just didn't care about market conditions today. But not the most conducive chart either. We gapped way up, we came all the way down, so by the time it broke this range late in the day, very attractive, right? The majority of the move was already out of it, so if you took a stab up here, yeah, you got the money, but just not a conducive setup, okay? Way too stretched out. But coincidentally, the only thing that came through this window. Now backtrack before before I get it, this window was banging every day, and this one was quiet. But boy, along with along with the gap down, the lockdown, the trading open here, this thing was just pushing things out. Was this guy right here, STWD? This is the classic look of one of these charts of a stock that's coming through turbo down, family, no support. There is no support. When this thing cracked right here on the intraday, and we look to the left to try to figure out where it might stop, where it might run into some potential support, there's nothing. Otherwise referred to as in the abyss or in the hole is what this is referred to, when there's nothing to stop it or catch it. It's just the opposite of a stock hitting all-time highs. And so these guys are coming out in force here lately. So when we look at this pattern, I mean, look at this thing. From this perspective, you're like, yeah, this thing's gotten clobbered. I mean, I really don't, this is kind of scary right here. However, we know it's weak. So when we can identify something like this on the intraday, just takes all the fear out of it, right? All right, meandering along until a good over 3 hours into the market, finally tips its hand, breaks that little plane right there. Oh, well, look at the prior 15-minute candle. I mean, it's almost just laughable how low risk trade this was today. And of course, we get a little sideways action, and then just slowly, and then we finally get the bigger move towards the end of the session in the last hour. But once again, very small risk, stocks in the hole with nothing to catch it, meanders sideways and produces a good return by the end of the day. You know, looking at 1571 down to 1422, not too shabby at all. Another one that got pumped out by that one was STOR. Once again, looking at the intraday, could inspire a little bit of fear because it's down. So again, look at the smaller time frame to take fear out of the picture. This guy did it 1, 2, 3, 4, right about an hour into the open, right at the beginning of this candle right here. We get the alert. Hey, STOR doing massive volume. By the way, let's see how it finishes as far as volume goes on the day. And by the way, relative volume was cooking on this thing all day. Finished the day at 3.25. These smaller time frames, at the 5-minute, we're just kicking it all day. But what a beautiful trade. I mean, you can barely even see the prior 15-minute candle there because, right? But even if we use back here, I mean, heck, you could have used all the way up here, but you see, once it cracked through that level, no looking back. And then the beautiful thing about this one, buyers and sellers became equal for a period of time again, and then it released even beautiful time to add to a position of this nature. And you've probably heard that as well. It's a lot more confusing for the newer people. Hey, you're supposed to add to your winners. You know, cut your losers when you're supposed to. And when it's conducive, add to your winners. So the simplicity of this pattern, and then the simplicity on when to add to a winning position, if it sets up nicely again. I mean, this is just textbook. You don't see this very often, but you saw it today in STOR, and kicking out about 7 million shares today. Definitely the sellers were in control, but two examples in STWD and STOR of very small risk and extremely high reward. I'm not even going to bother drawing the risk line up there because it's just so small. And we had one more guy getting kicked out of there as well, VLRS, a little bit lower dollar of a stock. I believe the first signal here was 485. Hey, seeing this and everything's looking the same on the daily, but a nice cozy little breakdown right here. 485 was the mark right here, as you can see from the alert window. Just, not down here, not even halfway, but right as it broke right there, $4.85. If we're going to play the, this is just laughable today, some of these risk levels. Look at that, okay? First level right here, bang, sets up again nicely here for the majority of the move. So, in this market where we've got just kind of a blanket of selling laying over everything, there is a silver lining to all of this downside action, and that is the ability to go short, right? And these things are all over the place right now. Now tomorrow, what's going to be presented? I don't know. We might have more heavy selling blankets laid over the market. Maybe we go up. But the beautiful part about it is if tomorrow's a buying day, the chart is the same, just inverted, right? Instead of breaking these lower levels, it's going to break these top levels, and we play it the same way, except the other side. So if you're looking for a nice, simple trading strategy for intraday action, this is definitely the ticket right here. I've been watching these things for years. Sometimes I miss a lot of them, but boy, I'm really trying to pay attention in these market conditions because it just seems to be the path of least resistance, manageable risk, small risk, and right now, rewards that are much, much higher than the risk level. Yeah, PM's asking if I could show you guys how to add the dividend yield formula. Let me see if I still have my one screen up. Hold on, and if we have time, I'd be happy to march it through that. All right, we got just enough time here. So if you are familiar with getting to the script editor to begin with, okay, once you log in on the website, you'll see the ability to create a new custom formula by selecting one of the available U prefixes. You can see right here, I just picked U57. Here's the formula right here that I dropped into the chat, and you're just going to drop it right in the source box. Right here is the description. I just called it dividend yield. It's working in a percentage basis. The format is on 1.0 by default, and that's what I leave it on. I didn't attach a graphics cone to it. I could if I wanted to, but I'm a simpleton, so I just didn't attach any graphics to it. So once you drop the formula in there and title it, put percent in there, leave it on format, no graphics, and you hit save, boom. That's how easy it is to get it into your account with the corresponding U prefix. Now, it's always a good idea once you add a custom formula to come over here and give your account a little refresh. And that way, when you go into either a top list or an alert window and you go to your filters, all you have to do is scroll all the way to the bottom of the filter list, and that's where all your U prefixes or custom formulas will make their home, at the bottom of your filter list. Okay, so before we wrap up here, I was showing you guys all of the sweet short plays on the opening range breaks that this window turbo down family no support kicked out. So if you'd like to spawn those windows and start giving them a watch, your best bet is just to scroll over here, click on channel 4, and you're going to see all of mine, Steve, Andy's, and Sean's favorite windows. You can see there's the turbo down, family up, family, no support, no resistance. All you got to do is right click on these guys and just save them to your cloud. That way you can spawn them, save them to your default layout, and that's the way you go get them. So I do believe it is that time. We got about 2 minutes to the hour, and Scott's going to come in here and walk us out, let you guys know how you can save money on an initial subscription or on an upgrade. So Scott, if you're ready, we're ready for you.
Yeah, thanks, Jamie and Steve. We have a new ebook out written by our CIO, our Chief Information Officer, Dave Mabe, the guy who created Holly and the Odds Maker. It's got some ideas about how to use earnings season to your advantage, including some strategies you can download. So do check it out. It's free. Just go to trade-ideas.com/earnings. We have a podcast. We've released several so far this year, so check those out. Go to whatever podcast app you listen to your pods in and search for Trade Ideas Podcast and subscribe. And then go ahead and download some back issues that sound interesting to you. We've got some guest spots on there that have some good interviews. We've got a code that's good this month. March on, all caps. You can either use this to upgrade or start a new subscription and save 15% off the first month or year. Write that down. Go ahead and do that upgrade or do that first subscription. If you have any questions, email us info@trade-ideas.com. That goes into our help desk software. Gets you your question to the right place. It won't get lost. You can also follow Jamie on Twitter. See what he's up to @QuantBot. Steve Gomez is @TodayTrader. We've also got @TradeIdeas. And Trade Ideas Pro is the Facebook handle to follow and share what we post with your friends. Thanks, everyone. We'll put the recording up later on tonight or tomorrow. Thanks, Steve. Thanks, Jamie.
Yep.
See you tomorrow.
Thank you very much. Thanks for tuning in, and we'll